Hi, everyone, and welcome back to the first of our two final sessions for the day. It's great to see so many of you here and logged on. I hope you've enjoyed the session so far. So without further ado, it gives me great pleasure to introduce our next panel, Accelerating US Femtech Investment with a More Holistic View on Women's Health. Don't forget to put your questions for the panel. But Elizabeth, it's over to you to kick us off.
Okay, thanks so much, Becky. I want to welcome everyone to the panel today. Really excited for the conversation with my fellow panelists. It's really my absolute favorite thing to talk about, investing in women's health in the US. I'm Elizabeth Bailey, Managing Director of RH Capital. We're an impact-first venture capital fund focused exclusively on women's health. We've been investing in the space for about 3 years now and are investing out of our second fund. Have made about a dozen investments in the space. So I thought I would start out just by providing a little bit of context, to talk about where we are, what the state of the field is in femtech investing. About a month ago, PitchBook released their report showing that over $1 billion has been invested this year in femtech, which is a huge landmark for the field. We saw 127 deals. Again, just to date, we're not done with 2021 yet. We've also seen bigger deals being done. If you look at deals like Maven and Willow and Kindbody, but the majority are still small and certainly early stage. And I think one of the most exciting things over the last year or so, or couple of years, is the exits in this space. Companies like Lydia and Ovia Health and Modern Fertility. We actually are seeing a critical mass of exits, which has really been lacking in this space. So we're able to show that you actually can generate strong financial returns while also meeting the many unmet needs in women's health. But before I paint too sanguine a picture, I want to remind everyone that even $1 billion of investment in the women's health space is still only 2% of all healthcare venture funding. So we have a long way to go. And with that sobering statistic, I want to turn things over to my panelists to hear from you all. Where do you think we are on the trajectory of women's health investing? And are we at an exciting place? Is it are we headed somewhere good? Are we seeing a plateau? Would love to get your perspective on the state of the field and also what role you're playing in investing. So I will turn things over to start us off, Maria Velissaris.
Thanks, Elizabeth. Well, I think it's a really exciting time in women's healthcare. The fact that people are talking about it or thinking about it, there's conferences talking about it. I think that's a huge leap from where we were a decade ago. And so I really do think that this is an exciting time for the founders in this space, also for the funders in this space. There's more women joining, starting funds of our own so that we can be able to be unbiased when we are making investments. And hopefully, because of more women entering the field as fund managers, we'll be able to get more funding to these female founders so that we can change those dire statistics. So I think it's a really great time. We've seen tremendous momentum in 2021, off of the heels of digital health, especially in 2020. And so I only see the category continuing to grow. And as you said, Elizabeth, exits, bring more people, really prove out our thesis. And I think we're starting to see that. We've had acquisitions or exits almost every month this year. That's amazing for women's healthcare. And so I'm really bullish on the trajectory.
Thanks, Maria. I want to turn things over to Christine.
Sure, thank you so much. I'm at Emerald Ventures Fund. I'm going to give you kind of the therapeutics perspective. So we focus on investing in early stage preclinical therapeutic companies, but any therapeutic area, any modality. And I agree with Maria. I like to be optimistic, and I hope that this trend is a continuing, upward swing of investing in women's health in general. I think it has been pretty tough to get a lot of funds excited about this, but I have been seeing that there are more funds, such as your own, Elizabeth, that's focused on women's health, but also other funds that are creating funds inside funds that are more specific to women's health, and to just investing more in women managed companies as well. So from a therapeutic perspective, it's still been a little hard to get things syndicated, but I hope that the exits and the excitement here in terms of let's really impact a huge areas of medical need, I think is getting more people excited to join the fray here and make some really important investments.
Great, thank you. Kate, do you want to jump in?
Yes, thank you for having me, number one. Piggybacking on what was just said, and also digging in a little bit on what Maria had mentioned, is there's a big nugget that we all have to focus on, that's the traditional VC structure, which is fraught with all the problems. That's a double layer for all of us, not only investing in women, but now investing in a space that is targeting women's issues. So it goes without saying that that is going to be a large mountain we need to continue to kind of push against. On the flip side of that, I feel really similarly to Maria as well, as we've got a really exciting time now where that traditional structure and the mindset is shifting. We've got new fund managers that are coming into play. We have been giving a lot of space to women founders who are coming forward and somewhat naturally really targeting a lot of the issues that we're talking about right now. Ever so slowly, they're starting to get more funding. I get excited again about the check side of the table. And right now, I think as of last year, 73% of the women-led funds were all started in the last 5 years. If you project that out in the next 20 years, that is going to expand. And that's where we get really exciting in the next 2 decades. So I do, with a lot of work to do everywhere, I do also have an optimistic view on this in general.
Okay, great, thanks. So following on, Tracy, do you want to jump in, sort of maybe giving both perspectives of a woman in VC and a woman entrepreneur?
Sure, thank you. I think, what's been said here is correct. We started investing in the space in 2012. So things have come a long way, and it's wonderful for events like this to convene not just investors, but entrepreneurs and bring the community together. I do think we still have some ways to go on defining some of these new technologies for women's health. I think it's a really exciting space for new breakthroughs now that people are focused on it in the science side and in the tech side. Really trying to think about new business models, new healthcare models. What is health going to look like in 10 and 15 years with all of these innovations? And how are the different traditional players going to either evolve or reinvent themselves to be partners in that? So as an entrepreneur, that's what we think about is, for example, hospitals, what are they going to look like in 5 and 10 years? And how do they meet the needs of women and families in a more distributed marketplace? And what are the different roles of payers and providers? So I think there's a lot to unwrap, and it creates a lot of opportunity. But again, I think we're all trying to get our arms around that opportunity and where to invest and where to support technologies to help drive that change. So super exciting, but I think someone said a lot of work to do for sure.
Agreed. Adam, do you want to jump in with perspective from a more generalist fund?
Yeah, sure. Thanks, Elizabeth. And thanks to Beck and the LSX team for inviting me. Always put on such a great conference. So Dream It, for those in the audience, just quickly, we're a seed and Series A venture fund focused on health tech and cyber. And by health tech, I mean digital health and med tech, and a handful of diagnostics tossed in there as well. So yeah, it's certainly an interesting time. I mean, to your opening comments, Elizabeth, it feels like an underserved, underinvested space for sure, and certainly some positive signaling in terms of capital coming into the space that my co-panelists have already alluded to. But bottom line, right, at the end of the day, money goes where we believe we can get outsized returns. So the fact that it's an underinvested space implies that there is an opportunity to invest here and generate, outsized returns. But I'm not sure there's a whole lot of data there yet to support that. A few lightning strikes of huge unicorn exits doesn't really define an investment thesis. While it's encouraging, it's a little bit anecdotal. And there's not, I don't think, enough data there yet to say that investing in this space generally will deliver the outsized returns. Certainly, there are very large unmet clinical needs in the space, which is always the right place to start. But then to Tracy's point, are there profitable business models to go behind solving those problems? And at the end of the day, do those lead to exits? Are there acquirers? Most of these companies are not going to go public. So generally, as an investor, we come in thinking, is there a potential acquirer down the road that can deliver venture level returns for particular platforms? So I think, certainly exciting times, but still, hopefully it feels like we're kind of at that takeoff or inflection point. But I bet if we have this conversation in 12 or 18 months, we'll have a lot more insight.
Got it. Thank you. So Christine, I would love to hear your perspective from the strategic standpoint of what are you looking for? What role do strategics and strategic venture arms have to play in spurring investment in the space? And what have been some of the barriers that you've seen, and any enablers that you've seen sort of helping to address some of those barriers in your own work?
Yeah, absolutely. Happy to do so. So we're the corporate venture arm of US Merck. And Merck actually just spun out most of their women's health into a separate company called Organon. And where I was really encouraged is that when I broached the topic of investing in therapeutics for women's health, so addressing some of the various different diseases, ovarian failure, PCOS, endometriosis, etc., there was significant support from the CEO on down to explore those areas. Fertility would be a little tougher for us because that's kind of gone to Organon, but I think in general that's always an area that stimulates interest, because I think there's a business model there that's been tried and true. I think for some of the barriers that I have seen is really trying to syndicate these therapeutic companies. They're early. We invest preclinically, as I mentioned, so they're early stage. Sometimes there's animal data, sometimes there isn't, and really reaching out to various different types of investors. I've gotten very mixed conversations back and thoughts back. Where I found traction is going out to my the women partners that I know in various different funds, and that has worked. That has gotten the discussion going within the fund. That seems to have led to a lot more traction. I think it's mostly not understanding these diseases, and also, as has been mentioned now multiple times, is really showing that there's acquirers and an exit that you can get. But I think that data is there, or at least a little bit of that data is there, and it's growing. I think as we see more and more exits, this will be a lot easier to syndicate. I think that for us, kind of the advantage of being the strategic is really thinking about having that possibility of an acquirer coming into that syndicate. It is not assured that Merck is going to acquire any of the companies that we invest in. We take only equity, we don't take any rights. But what it does do is get the other strategics thinking, why is Emerald Ventures Fund investing? Should we, as Amgen or AbbVie or whoever, start to invest there too? Is this an opportunity for us to really see some of these early stage women's health companies, see how the development goes, really understand this process, really understand this field? And then that gives each one of these pharma companies a better chance to think about making that investment after you get to certain milestones, like early human data, things like that. So that's kind of what I would say are some of the key advantages and barriers that I have seen so far.
Yeah, thank you. I mean, what's one of the things that I think has been interesting in this space, maybe a little different from other spaces, is I think early stage companies are really welcoming strategic into rounds much earlier than in other places, because it is new. I think companies are looking for signals to the market that this is, a valid scientific approach, and big corporates are looking. So I think, from my perspective, and certainly with our portfolio, strategic involvement has been really important and welcome. Maria, I want to turn things over to you to talk a little bit about the role of specialized women's health funds, which, I certainly have some thoughts on, but there are a few of us now in the marketplace, and I'd love to hear about how you're engaging with co-investors and what role you're playing, being so specialized in this space and having that domain expertise.
Well, one thing that I really like about investing in women's health is the other funds. And, Elizabeth and, we've been working together as we continue to grow out this vertical. And I love that it's a collaborative environment. And we're talking about deals together. We're thinking about, who may be best to lead certain deals. And so for us, we're open to leading or following on to deals. And, we're also very happy to share what we know and our knowledge of the space. We've been investing, before we had the fund, for the last 5 years in women's healthcare. So we've seen a lot of these companies. We've seen them, the progress they've made over the last years or not. And we see how the teams have operated together, if they've hit their milestones. So we have a lot of data that we feel like as a specialized fund is pretty unique to us, because we're very focused on a very specific part of the market that a lot of people haven't been looking at for years. So we really also see ourselves as an information or a data repository so that other people can get accurate information about the state of the market.
Yeah, I would thoroughly agree. And I think the specialized funds definitely have an important role to play in, whether it's we share our diligence or, sort of our general knowledge base with more generalist funds. So I'm curious, Adam, from your perspective, what are some of the barriers, and is the sort of know-how in women's health or that domain expertise a barrier for you? And how do you overcome maybe not having deep expertise in the space to get comfortable with deals?
I mean, our process is very similar, I guess, to most funds in terms of going through the heavy lifting and the diligence. But I think, your point is right. It's so cliche to say, we invest in the management and we bet on the jockey, not the horse. But it's even though it's cliche, it's true, right? And so there aren't as many, because there haven't been as many funded women-led companies, there aren't as many female serial successful entrepreneurs out there as one would like. So you do have to bet, you're betting on maybe younger entrepreneurs, their vision, their passion. And so that just has to be vetted a little bit more carefully than an entrepreneur who's done it 3 or 4 times. And also there's funding risk, right? We've talked about the fact that, hey, a serial entrepreneur is going to be able to go back to their network and, maybe raise capital in a day or a week. That might take an entrepreneur who's a first timer, go through a much longer, painful process. And financing risk is always a pretty heavy risk. When you're a seed or Series A investor, you can have a great platform. I mean, Christine talked about it early on, right? Hard to syndicate. So you can really love and believe in a company that in your mind is hitting milestones and doing well. But if you can't find partners to syndicate with, then either A, you got a really big problem, because if the company can't stay funded, they can't meet their goals, or B, even if they can raise, you can't defend your investment. Somebody might get a great return, but it may not be you, because if you get sort of your early investments at risk and gets heavily diluted, you're not going to get the return. So I don't think we really look at it any differently than we look at any other kind of market opportunity, but just understanding there are certain other layers of risk because of the funding environment for these opportunities that may not exist in other spaces.
Thanks. A couple things that are probably worth mentioning. There's an interesting sort of new due diligence checklist out there. I think it's called Due Diligence 2.0, that really has us examine, is the way that we've historically done diligence, is that really biasing successful existing entrepreneurs? And so I do think that it's worth re-examining the way we conduct diligence in order to not be quite as rigid with the criteria that we've used historically, to open up, because then there's also data to show, and Kate, I'm going to turn things over to you. I know you are steeped in this data, but there's also data to show that women-founded and more diverse teams actually outperform. And so I think it's worth examining why we just look for, has somebody done it before? There are other things that we might want to factor in and should factor in to expand the pool of entrepreneurs that we're supporting. So Kate, I'll let you jump in here, because I know you spend a lot of time with the space.
Yeah, and I don't necessarily listen. There are data sets upon data sets upon data sets that suggest that women-led teams, more diverse teams, et cetera, have higher ROI, you name it. I don't even necessarily want to spend time on that, because just go out and research it and you can do the work on that. I want to push back a little bit, and Adam, respectfully, if it's okay, I just want to push back a little bit on a couple of the items that you mentioned. You are and I will take this into the broader context. Many investors right now, 98% of the money out there right now is conducting their firms based on risk management, completely logical. They are basing it on past experiences, completely logical. Elizabeth, what you mentioned about having a different checklist or rethinking the way you're using historical data, all of these things move into a process whereby you're reinforcing previous investment decisions and continuing to invest in the same solutions, the same founders, et cetera. In the beginning of the conversation, and Adam, you had mentioned trying to look at, we don't have enough success stories, et cetera. Again, very normal. In my opinion, this is an insane opportunity. We have an entire 50% of the population that has been largely unaddressed in so many of these sectors. The deal opportunity in there alone is crazy. I mean, you have people considering solutions that if you went back 20 years ago and tried to analyze the mostly male-focused solutions that were coming out in some of those sectors, you now have opened up an additional like double marketplace on some of those things. So it's Elizabeth, what you mentioned is just really rethinking the way that we're analyzing these investment deals and trying to break free of the thing that keeps us at 98% of the funding is not going to these founders and into the sector. Like, we have to break that mindset or this is never going to change. So that's my daily diatribe for you all.
Thanks, Kate.
So, I mean, your point's very well taken, Kate. Don't disagree with what you said. But if what you're saying is a little bit observational and a little bit, but if what you're saying is true, then show me the data, right? What you're saying is true. There should be, we should be delivering, right, in terms of performance, right? ROI
of like women
for investment. The point is, it's an underserved market. 50% of the population's we're not developing solutions to solve problems. Then the translation should be, we should be getting outsized returns because there's an opportunity to go into that market and invest on favorable terms and get those outsized returns. And that will draw capital to the space, right? At the end of the day, supply and demand works, right? It's a free market. If you believe in that, the capital will be attracted to the space.
Yes, and I think to your original point about your firm and many of the firms out there are going to be waiting for, as you said, the next 12 to 18 months to see what shakes out, right? So that you have more data points. That's an understandable perspective from a risk management standpoint. However, I will say is prior to that, the data that I'm suggesting and that many of the women on this panel can probably also bring forward on basic performance of women founders, basic performers of solutions into markets that or similar or parallel markets that we're all talking about. There is such clear data on that, I mean, yes, I can provide it for you, but it is out there, it's being talked about, it's in the media, it's that type of thing. So again, I'll sort of go back to Elizabeth's point that she made is like, I do feel like, and taking this off of you, Adam, like 100%, I didn't mean to narrow in on you on this because this is this is what we're kind of dealing with. But I really encourage people to think differently about how they might make some of these adjustments, even if it's a little differently or a lot differently. That's when we can start really pushing the needle in terms of the funding that goes into this space and hopefully speed up that process of getting towards, okay, here's what we can expect, here are the data points, et cetera, et cetera, et cetera.
So one real quick comment, because I do not want to dominate the conversation here, but I do want to make a point that I think maybe you're not emphasizing enough, which is funds like ours, we're stage-based, right? So it's not that we don't believe in what you're saying, but what you're talking about is really the domain of angel and seed stage investors who, if they're buying your hypothesis, will put money into the space because they want to get in early before things evolve. We're not really a later stage investor, but we're a late seed Series A investor. So we're going to come in when there's some market traction around the platform, right? So I think it's an important distinction to make.
Yes, and I do. And that's why I was backing off on trying to make this that was not meant to be against your process. All of it makes sense and it's logical. There are some points in the way that what I will call traditional VC firms look at these deals. That's a little bit more of what I was trying to address. So that was not a you thing, even though I put you in the middle of the conversation.
So I do, I think that we're never going to do anything new if we just keep doing the same thing. So, Tracy, speaking of doing something new, it would be great if you could talk a little bit about, I guess it's a twofold question. One, what has been your experience with Astarte Medical as a first-time founder, trying to start and build a company in the space? And two, given what your original thesis was back in 2012, you were very early to the party. What has borne out, and how has your perspective changed since then on the femtech or women's health space?
Yeah, and I think the conversation was very helpful right before this, because I do think we can all have the best intentions on moving the space forward, but we're working in healthcare, and healthcare is not a unilaterally investor or entrepreneur focus. We've got a lot of stakeholders in healthcare and a lot of things that need to change to move this whole space forward. So I think investment is really important, but there are a lot of other components to this. So when we started, 8-9 years ago, there were a lot fewer deals, quite frankly. And so it was easier just to get a handle on the deals, to assess the deals. The space has grown considerably. And I think being an investor today in femtech and women's health is exciting. And there's a lot more opportunity from the, company side. But there's also a lot of uncertainty in who's going to win in some of these new and burgeoning spaces. So I think we may be headed a little bit easy in that there was, a smaller pool to swim in. But I think, that just shows the opportunity for growth. The reason, we started our company, which is really focused on selling to hospitals in the infant and early life space, was also driven by needs, but we're a digital health solution. We sell to hospitals. We have a very traditional business model. And so as an investor, and I sit with Adam on this, we had to understand how we were going to get from point A to point B. What was the revenue model? It had to all kind of come together for us as former investors moving into the entrepreneur side. And it was all financially based. I'm an accounting person. The numbers have to make sense to me. I think where we took a different risk, and what to lead into your question on fundraising, we picked what many will call a niche market, right? My initial market's about 250 million. It's not $1 billion market, but if I can see a path to profitability, that is where I, as an investor and I, as an entrepreneur, am comfortable, right, for this business. So we've raised 2 rounds in addition to being sort of the seed investors of our company. It has been incredibly difficult. I thought the second time would be easier than the first. It was not. I think part of that is the space that we've chosen to be in, and just the competition for deals. As much as you can love women's health, which I clearly do, investor and certainly LP capital are looking very broadly, and they're going to follow the returns. And I think there is something to be said that entrepreneurs need to really focus on how we get investors' money back at this sort of outsized rate, and that is imperative. So we saw a little bit of progress between our 2 rounds, which were about 2 years apart, but I would say it wasn't as dramatic as one would like, for sure.
Thank you. We have a question from the audience, which I will direct to you, Christine. How important is IP portfolio when evaluating a deal or looking to invest in a company? And given that you're in the therapeutic space, I would imagine important, but would love for you to comment on that. And then I'd actually love for you, Maria, not investing in the therapeutic space, more in the digital space, how important is IP to you?
Yeah, it's critical. We are early stage investors as well. We do seed, Series A, even Series B. So, as you think about founding a company, you may or may not have, composition and end product IP yet. But so we just need to see that path to how are you going to get that IP, because it's really the IP that protects the end stage product from competition, and you want to be able to show that you can get this to the market and that there is revenue to be had. So it's not critical that you have every duck lined up to get your new company funded. But there has to be a clear path of what is it that you have, what's your platform, what's your target, what's your idea, how is that going to move along the development pathway and generate IP that will be protective for your product at the end of the day. If you're doing a new company, as you go into Series A's and Series B, you really have to start showing that you're getting to that IP to make people feel comfortable that this is protectable and that you have something there.
Yeah, and I think it depends on the type of product that you have. If it's already kind of commoditized in the market, maybe we're just competing on brand or a new business model. But I mean, we do kind of look for IP for med devices or diagnostics. It's really important to protect your IP. Also, just to build a moat, because what we want is to make sure that you have some kind of competitive advantage over other entrants into the market, and the IP can really create a moat and help us understand that you'll be able to grow before the rest of the horses get let out of the gates. And so that's when it's really important to us. But again, it's very dependent on what type of product or service that you're bringing to the market.
Maybe just add a little bit of color there. Certainly on the therapeutics, the device, the diagnostic side, the IP is going to be really important. We're mostly a digital health investor, and there the IP tends to be a lot less important in terms of like patents. Yes, we want things to be proprietary, unique, differentiated, but in terms of thinking of IP in the traditional sense of patents, that everybody knows for software, patents don't really create a defendable moat in the long term. So we put a lot less emphasis on a device. We absolutely want some real IP. For software-based platforms, it's more around the differentiation and not so much around the IP.
Yeah, makes sense. So let's, I guess, turn the conversation to where we see opportunities over the next 1 to 2 years. And I know this is a US focused panel. So, where are opportunities in the US market in Femtech that you're excited about? Kate, do you want to kick us off?
Yes. So we, as a fund, we tend to focus a little bit more on digital solutions as well. We've seen, I'll tell you first where we've seen a lot of focus. We've seen a lot of focus on community side, general, like top level services, that type of thing, which we get a little less excited about. We like to see a little bit more sort of narrow targeted focus on items. And I'm trying to think across, we get so much deal flow in this space. There have been some interesting plays with both a consumer focused good along with an entire digital solution that have been pretty neat. A lot of that has to do, you've really got to dig in on kind of go to market strategy and what's the full differentiation behind that. But that's been kind of interesting that we've been seeing popping up a lot lately. And then we've also seen on the insurance side, I shouldn't quite say the insurance side, the provider side network. There have been some neat things sort of digging in on both this interplay between insurance, providing large numbers of people, et cetera, on everything from birth control to, menopause solutions and that type of thing. So those are a couple of things we've seen.
Okay. Christine.
Yeah, I've been excited to see that a lot more focus just on basic biology here and looking at how are the different pathways really interconnected and really showing that, for instance, that the ovary is kind of, the hub in this, hub and spoke model where it's really directing a lot of what's going on and really having a lot of that hormone communication. And I think there's some really cool biology that's starting to be uncovered to not just link to a particular woman tissue disease, but to things like cardiovascular disease in women, osteoporosis in women. So very large, very big problems. And that's what's gotten me really excited on the therapeutic side, is really starting to see the much more focus just on the women's biology, to really understand that and how it's differentiated, and start finding some really interesting places where we can hopefully toggle things and really have an impact on disease.
Yeah, agreed. We're also excited on seeing some interesting things in that space. Maria?
Two things I'm really excited about. Number one is women's health has been pretty fragmented. People are creating a product for this and that. And I'm really excited because I'm starting to see founders and entrepreneurs think a little bit bigger. And they're thinking about building platforms with the device, with consumables, with education, with community. So I'm glad that they're starting to think bigger, because that's how we're going to create truly venture backable companies that can IPO and that can become billion-dollar companies, so that we can get other believers back in with us, like Adam. But the other thing, number two, is I'm really excited that companies are starting to think about the overlay of social determinants of health. I think that's imperative for any healthcare company, especially a women's healthcare company, whether we're dealing with, menstruation all the way to menopause, with mental health in between. I think overlaying social determinants of health is going to become just a vital part of any kind of company that is has an end consumer of women.
Couldn't agree more there. Adam, do you want to share some stuff that you're excited about?
Sure. I mean, where we are now, there's sort of like two 800-pound gorillas in the room, if you will. The first one's super obvious, right? The pandemic, the shift to virtualization of care. I mean, overnight reimbursement, legislative, regulatory barriers were just kicked down. So from the start of the pandemic to the heart of the pandemic, 38-time increase in the number of virtual care visits. So that has obvious implications for technology, for being able to manage patients remotely. I sort of think of three buckets there. Just the sensor side, how do we collect patient information in the home, whether that's vital sign information or other information. There's an infrastructure piece of that, which is how do we actually move that data from the home to where it needs to go, right? And then there's the provider interface, how do providers use that information once we get it to them, predictive analytics so that we can intervene on treat things before they cost more or exacerbate. So huge amount of technology there. So obviously, if there are technologies specific on Femtech that align with delivering care to the home and making it easier for providers to become actionable, that's gonna, you got the wind at your back, right? You might as well get in front of the wave in terms of bringing new technology where there's already a lot of momentum. And then the second one is value-based care. Right now, providers are taking on the risks of the cost of care. So again, if you have Femtech platforms that align with value-based medicine, which at the end of the day means you have to be able to show some kind of a positive impact on cost and deliver a real ROI, that's exciting stuff. You better, I always say, you better do one of three things. You better save somebody money, you better make somebody money, or you better make somebody's life easier. You're not doing one of those three things, you got a big hill to climb. But if you are doing those things, there's an appetite for what you got.
Yep, agreed. Tracy, other than NICU solutions, or talk about NICU solutions.
Yeah, well, I think to Adam's point, we have made a play in nutrition and its role in health. We're starting in the neonatal intensive care units, so really expensive patients, saving money and making life easier for some very vulnerable populations. But I think Maria's point about social determinants and access to health and all of that is a huge area, I think, that will move the field forward. Understanding that not all women have the same access and ability to manage their care that, maybe many folks around the table here could, and making sure we design solutions for everyone. I think we would do ourselves a huge disservice to just build solutions for some part of that market. So I think that's a huge area of opportunity, not just for ourselves, but for many players. And I think there's a lot of legislative, state initiatives, Medicaid initiatives to really start to catalyze that area. So I'm super excited about that.
Great. I think that is a great place to wrap up the panel. We have been looking specifically at how to support companies in developing their Medicaid strategies. So if you're focused on maternal health, as an example, 50%, almost 50% of the births in the US are Medicaid. If you are not serving Medicaid, you are missing a huge portion of the market. So I think, you know, looking at ways to develop solutions that address the needs of all women versus just a particular segment, I think is going to maximize chances for success, both financially and in terms of the public health impact. So I want to thank you all. It is always fun to talk about investing in Femtech in the US. I feel particularly honored to get to hang out with you for the last 45 minutes. I do want to thank the conference organizers. I think every time we get to call attention to women's health, investing in women's health, innovation in women's health, we're elevating the conversation. And so I know it's always a heavy lift to organize these conferences. So excited to see the agenda and all of the people showing up to talk about and move the needle on women's health. So I'm going to turn things back over to you, Becky.
Thanks so much, Elizabeth. And thank you to all of the fantastic panelists. I'd say this every time, but 45 minutes really does go really quickly, especially when there are so many voices on the panel and, you know, such insightful comments. So thank you so much. Absolute pleasure to be a champion for Femtech or women's health, depending on what you want to call it. That was a previous panel. But no, seriously, absolute pleasure. And we're nearly at the end of day one. Can't believe it. So join me in 15 minutes, a mere 15 minutes for a discussion around sort of big pharma and what they're doing within Femtech and that space. But thank you once again to all the panelists, and I will speak to you all very soon.